Hi. In this video, I will go through the budget requirements related to OAA4. First of all, you have to make a detailed marketing budget where you have to list all your different kinds of activities, and then you have to make an overview of your income statement budget, including some ratios. Then you have to make a cash flow budget, and then at last you have to make some kind of a procedure for the budget control. How will you do that? So the first part is a total and detailed budget, and as you can see here, uploaded by Helle, you have 17 different kinds of activities. It's just an inspiration list as far as I understand, because you probably don't have all of them. And don't fill in any figures here, because you have the notes here where you can fill in all the amounts from the different activities, and automatically it will come to the total promotion budget here. So this is a very important part. When you have done this, you should make your income statement budget. And as you can see, I've done it in quarters, but maybe it's for you and your project better with per month, or maybe years. I don't know. I don't know your project. Remember one important thing. You are only going to make a budget for your project. You're not going to make a budget for the total company. You have some kind of project where you want to, I don't know, introduce a new product or export to another country, whatever. And it is all the costs, promotion and other costs related to this project, that you are going to make a budget for. So in this case, you can see here, you have your promotion cost according to the specification and some other capacity costs. And then you have made the estimation on your revenue and your cost of goods sold, your gross profit, and then you can calculate how much is your EBITDA. That is what you are going to do. And it's important that you include in this part the return on your marketing investment. If you have problems with the calculations, you can see you have the amounts here. You can see how this is calculated. Also include break-even calculations. Units, if it's possible. It will always be possible on the revenue, so that should be included. And the safety margin, how much can your estimated revenue decrease without having a loss in the company? This was the income statement budget, the overview. It is also very important that you are doing the cash flow budget. Cash is king, and I recommend you to use the inflow-outflow model. It's rather simple, and this is just an example. Again, I used the quarters. Maybe you should do it per month. It's up to you. When you have made your specific marketing budget and your income statement budget and your cash flow budget, you have to tell and explain how will you make sure when you implement this that you are on right track. And for this purpose, you need two kind of tables. One is the income statement budget control. As you can see here, you have the budget here, and then you have after the first quarter, in this case, it could be month in your case, you have the accounts, what really happened, and then you have calculated the deviations and as a percentage. And I have calculated here the gross profit margin and the EBITDA margin. So it is your check on the profit, but you also have to check and focus on your cash flow control. What was your budget for the cash flow, and what did really happen, and what was the deviation? And you have to explain how often should you have these meetings, and decide, do these deviations have as a consequence that we have to change our plans. So this last part, the budget control, is very important as well.